What's up, guys? Welcome back to Everyday Money. Now, a lot of times on this channel, what I will do is I'll talk about stocks, I'll talk about index funds, and there's a reason for that, because for the most part, they are a cheap and easy way for people to get their money working for them. And that's my main goal here, is to try to get people to get their money to earn money for them so that they don't necessarily have to work for every single dollar that they make, and maybe move themselves towards financial freedom. And stocks and index funds, pretty much once you've decided what you want to get into, there's not a whole lot of mental work that needs to be done after that. You can just keep pumping money in there. And for the most part, they're pretty inexpensive to get into. But I wanted to talk to you about a whole nother side of my investing strategy, and that is investing in real estate. Now, the thing that makes this a little bit harder is that there is a lot more time, a lot more money, and a lot more ongoing effort involved in running a real estate investment, as far as if you own it, if you manage it. But the big deal is that there is a chance for a much bigger payoff in the end than stocks. Because a lot of times when we think about stocks and index funds, we start talking about a 20 or 30 or 40 year time frame in order for that money to compound into grow into a large sum of money. However, with real estate, depending on when you buy, when you sell, what you do to the property, how you manage it, etc., there is a lot of potential for you to make a lot of money in a very short period of time, and that's what we're going to talk about today. So I am a very small real estate investor. I have only had 3 real estate investments with the 2 partners that I have in my little real estate investing company. We've done 2 single families, and then we have sold those and purchased a 3-unit multifamily with the proceeds from one of those single families. So I'm a pretty small real estate investor, probably relatable to any of you guys out there that only have 1 or 2 real estate investments, or people that are thinking about getting into the real estate investment field. I'm not a huge, $4 million having real estate investor like Jason Bay on the West Coast. Check out his channel. If you get a sec, he's got some pretty awesome videos there. But I want to walk you through the way that we acquired, what we're doing with this building, how much money it makes, and probably most important to you is how much money I get paid per month by holding and managing this 3-unit apartment building. So we had sold a single family investment that we had that we rented for a while. It kept it longer than 1 year, so we only had to pay long-term capital gains on it. And we had sold that and received about $25,000 in proceeds, and we wanted to level up our real estate investing into multifamilies, because you get a lot of advantages with multifamily investing, such as multiple units under one roof, using maybe 1 or 2 or 3 furnaces. It's just all it takes. Several units, condenses it into one, and then you get some savings on that based on scale. We found a building that was what we were looking for. We were looking for 2 to 4 units. It was a 3-unit building, and the cool part about this, it was an all brick building, and it was 3 stories tall, and so every apartment had its own floor, so you didn't have to worry about neighbors on the sides, just, top and bottom. These are relatively spacious apartments. There are 2 2-bedroom units on the 2nd and 3rd floor, and there is a 1-bedroom unit on the 1st floor, but that 1-bedroom unit actually is big enough to be a 2-bedroom unit, but you have to walk through one of the bedrooms to get to the kitchen, so we just market it as a 1-bedroom unit with the potential to be used as 2. It was listed for $85,000, which probably floors some of you guys in the higher cost of living area, but we didn't even pay that. We ended up getting the building for $80,000. We took $20,000 as a down payment because we needed to put down 25% out of the proceeds that we had received from the house that we sold, plus about $3,000 in closing costs. We took a 30-year note at 4.75% and have a mortgage that's right around $550, and that just fluctuates based on what is necessary for the escrow account. Now, the reason that we were able to get this for so cheap, and this was at the end of 2015, I believe it was December of 2015, is because the building was not performing well. The tenants that were in there were, not the greatest folks to be around. It needed quite a bit of work. We remodeled kitchens, bathrooms, did some exterior work, did some work in the basement, evicted 2 tenants, one of which left without any problem. The other one did quite a bit of damage to the unit that they were in. Be sure to leave me a comment if you want to hear about that, because it's an interesting story, and it was the trials and tribulations of real estate, right? So we did all of this work, and we put in our own tenants that we screened very thoroughly, and we ended up setting the rents as of right now at $700, $650, and $675. And now you'll probably also be floored by how low those are, but again, this is a lower cost of living area, and we like to keep our rents lower in order to keep our tenants in place and reduce turnover, so that we can make more money long term. So the gross rents for this property are about $2,000 a month. And if you've had your pen and pad out, you'd notice that it was the numbers that I gave you just before were about $2,025. But over the course of this entire ownership of this property, it's been about $2,000 a month, or $24,000 a year. Now, the mortgage, like I said, is about $550. That comes right off the top. We have to pay utilities for water, sewer, and trash, because those are not separate in any way. This particular building does have separate gas and electric, which is something I always tell people to look for when they're looking to invest in rental property, so that it puts it on the tenant to conserve those things instead of you paying for it and then it essentially being unlimited, like when your kids leave light switches on all over the house. So we pay about $166 a month, and that also includes lawn care, because this is a multifamily, so the tenants don't take care of the lawn care. We take 30% and set that aside and just put that money in the bank, and those are to account for professional management, vacancies, and repairs. Now, like I said, we self-manage this unit, so we have no management fee, but we always account for that in case we would want that in the future. Vacancies, we don't have a lot of vacancy either, because we keep our rental rates just slightly below market rates. That keeps our people in the units long term, because it would be much more expensive for them to move somewhere else. And we take good care of the property, and we take good care of the tenants, and we have a respect for them as customers. And so we keep our vacancies very low. We also account 10% for repairs. Now, I don't know if we've ever spent a full 10% of our gross rents and repairs a year, but I'm sure that there are things that came close. We had one year where we had a string of furnace problems that just ended up costing us a bunch of money, but I still don't think we made it to 20% or to 10%. So if we don't have any of those costs, we just take that money and we set it aside in our bank account in case something big would happen, like we need to put a roof on, or we need to replace a bunch of concrete, or something that's just going to cost more than what we have budgeted every month for repairs. So now we've talked about all the expenses and just the bills that we have to pay out every month. We get down to sort of the meat and potatoes of what you guys are probably here for, and this is how much money I actually make from this 3-family apartment building as a small landlord. So I have 2 partners in this deal. One is my wife and one is my father, and we have a legitimate operating agreement, which I always recommend, even if you're dealing with family, so that there's no hurt feelings. And for the purposes of everyday life, I just refer to me and my wife as one partner and my father as the other. And we take 15% of the gross rents per month each. So 30% total out of that $2,000 a month, but 15% is $300 approximately per partner, and that we calculate that monthly. So if we do have a vacancy, it does go down, but for the most part, things stay at around $300. Now, we could take more out of this because, like I said, we had that 30% that we took out for management, vacancy, and repairs, and for the most part, we could say that we are the management and take another 10% out of there, but we like to leave that money set aside for rainy day funds or for reinvestment. So $300 is what I take home every month for owning and managing a 3-family building that we paid $80,000 for that grosses $2,000 a month. But wait, there's more. Now, you may not think that it's worth it to own and manage this building, put out that money for the down payment, deal with managing real estate and such for $300 a month. But if you think about it, $300 a month, if you got that as a net raise from your employer, you would probably be pretty happy with that. Most people would, at least. That would be about $500 a month gross increase, or over $3 an hour on your typical 40-hour-a-week work week. But that's not the only thing that we get out of this investment. For one, every month that we pay the mortgage on, which is every month, we get note pay down in the amount of about $93. The reason for that is because our tenants pay rent. We pay our mortgage out of that rent. The mortgage, a lot of it is taken up by the escrow amount for taxes and insurance and for interest. Like I said, we took a 30-year note on this at 4.75%. And so we are still in the early stages of that because we've only had this building for about 5 years. And so we are not paying off as much of the principal as maybe you would like. But nonetheless, that is $100 a month that we are getting from paying down the note simply. On top of that, the tax code really favors investors and real estate investors because we get to deduct things such as expenses and depreciation every year against our income from this property. So for example, on deductions, any expense that you have in that calendar year, you can deduct. So your taxes, your insurance, any interest fees, utilities, lawn care, any expense that you have, you are able to deduct that year. In addition, you have depreciation. And this is where the IRS says that something has a useful life, and then you can deduct that amount over a certain period of time. So for this building, we can deduct the amount that it depreciates every year until we have exhausted the depreciation. Now, you might think that could only go for new buildings because then they would be worthless, right? Well, that's not the case. Every time that a building changes ownership, you can start that depreciation schedule over again. And being that this building was built in the early 1900s, I am sure that it has been depreciated several times over in its life because it's likely been an investment almost its entire lifespan. That is sort of a weird thing when you think about it because although we get to deduct the depreciation, the building appreciates in real life and becomes more valuable as time goes by. But that is just one of the many IRS tax rules that benefit investors. And overall, the tax code is on investors' side, treats investments, be it real estate, stocks, whatever, in a much more favorable manner than it does W-2 earned income. And you can see that in the long-term capital gains rates and just how often things are taxed, such as investments only being taxed when you sell them and your income being taxed every single year. But in my experience, the biggest amount of money that you end up getting from these investments is when you sell them, especially if you got your investment at a reasonable price when you first got into it. And I've always said that you do make the money on your real estate investments on the front end because then as you either rehab them or turn them into much better performing assets as far as either lowering expenses or increasing revenue, you can sell that for a higher number. And the bigger spread on that, obviously, the more that you are going to profit in the end. I have found this on the 2 single-family investments that we sold. We made pretty significant capital gains in addition to the rent that we received for those during the times that we've held them. And right now, this building is also under contract to be sold. I will give you guys the details of that once it's all wrapped up and closed, so be sure to subscribe so that you don't miss that. In addition, I'm super excited to talk about where we are going to be taking the proceeds from that investments. We are looking at some short-term rentals in a very hot short-term rental market. This is going to be bigger than anything that I've ever done, and it's exciting and it's frightening and it's living outside of my comfort zone, which I always recommend that you guys do to a reasonable degree because that is how I found that I've gotten ahead in the past. But definitely stay tuned for that because it's going to be super exciting. Be sure to like and subscribe so that you don't miss out on that for sure. So I hope this gives you guys some insight on what you can expect to make as a small real estate investor and some of the other income streams that come off of this that may not be very evident from just the rent that's up front and from what your cut out of that rent is at the end of the day. Be sure to like this video if it gave you some value. Be sure to subscribe to my channel to grow your wealth, increase your success, put you on the road to financial freedom. I appreciate you guys watching today, and I'll see you in the next one.